The industry's maturing right now. And as it matures and it shakes out this leverage, and as we get clarity between what's a commodity and what's a security, and as these exchanges get regulated, I think that the trading leverage disappears and the opacity disappears. And you can already see right now the volatility is decreasing year by year and quarter by quarter in this asset as it matures.
MicroStrategy CEO and popular Bitcoin Perma bull Michael Saylor has warned that the inflation in the United States has not peaked. Mr. Saylor's comment comes on the backdrop of the U.S. inflation hitting a 40-year high, or 8.6%. However, he offers a glimmer of hope by stating that Bitcoin also has not peaked in value. Hello and welcome to Smart Tech Ideas. In today's video, Michael Saylor talks about Bitcoin as a hedge against 40-year high inflation, why it's a dominant digital network, and the two major liabilities that Bitcoin has been struggling against. Make sure to stick around till the end of this video where Michael Saylor explains why we are seeing so much volatility in the Bitcoin space. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
Yeah, Bitcoin is two things. First of all, it's a non-sovereign store of value asset. So it's like a digital gold, but you can't make any more of it, and you can move it at the speed of light, and you can program it on a computer. And so that makes it interesting to people that would be gold bugs. But it's also an open monetary network. So I can move $1 billion from here to Tokyo and back again every hour. And I can't do that with gold. And so that makes it very interesting to big tech investors. We actually think in a world where it's very difficult to move physical things around, it's hard to ship things on container ships or fly them around in airplanes, and supply chains are snarled. In that world, what you'd like is a pure block of digital energy that moves on a digital or a big tech network at the speed of light. And so Bitcoin kind of represents the best of both worlds. It's an inflation hedge because you can't make any more of it, and it's a store of value. But it's also a big tech dominant digital network like Google or like Apple or like Facebook. And of course, those have done very well in the past decade.
Concerning value, the #1 digital asset of Bitcoin has been hit hard by the news that the U.S. inflation has hit 8.6%, its highest in 40 years. Consequently, Bitcoin has lost the crucial $30,000 support level and has set a local low of $29,011. Furthermore, popular Bitcoin and crypto analysts have forecasted possible pain ahead for Bitcoin. According to these analyses, Bitcoin will likely bottom somewhere between $13,500 and $21,000. A glance at the daily Bitcoin chart reveals that Bitcoin is still in bear territory, trading below the 50-day, white, 100-day, yellow, and 200-day, green, moving averages. Additionally, the daily trade volume hints at continual selling, with the MACD's histogram confirming weak buying. Also from the chart, the daily MFI and RSI are in the neutral territory of 38 and 42, respectively. This, in turn, hints at the possibility of Bitcoin's price going either way. Bitcoin could plummet to the $28,000 support level or even the local low of $26,700. On the flip side, Bitcoin could attempt to tap the 50-day moving average at around the $32,000 price area.
The two big liabilities that Bitcoin has been struggling against are the fact that it's been trading on a bunch of different unregulated exchanges that could have up to 20x leverage or 100x leverage, and the fact that it was cross-collateralized with 19,500 other cryptos. Many of them are unregistered securities. A lot of them are very opaque.
When asked if he expects Bitcoin to drop further in MicroStrategy to suffer significant losses after its massive BTC investment, Michael Saylor stated that he does not believe the flagship cryptocurrency is likely to drop to zero. Saylor stated that now that both Bitcoin skeptics and deniers have been wrong, Bitcoin has not been banned by governments and they are seeking ways to adopt and regulate it. Bitcoin is certainly not going to zero. And if it is not going to zero, Saylor added, then it is going to the million USD price mark. The MicroStrategy chief also said that Bitcoin is obviously better than gold and everything that gold wants to be. If Bitcoin were worth only what gold is worth, Bitcoin would be only 500,000 USD per coin. As two recent factors in support of Bitcoin, Saylor mentioned Treasury Secretary Janet Yellen's speech at American University on April 7 and the crypto bill presented on June 7 by Senators Kirsten Gillibrand and Cynthia Lummis. In her speech in April, Yellen recited the legend about the mysterious Bitcoin creator Satoshi Nakamoto and explained that digital assets are crucial for the future of the United States. Based on these, Saylor believes people are now beginning to realize that Bitcoin is here to stay and its adoption is expanding.
When you have lots of other assets that are being traded on a Saturday afternoon with leverage, that are either they're being lent to buy and sell Bitcoin, or Bitcoin is being pledged to buy or sell these other things with 20x leverage, you're going to get volatility.
Michael Saylor believes Bitcoin to be a unique blockchain that cannot be replicated even if he provided $5 billion instantly to sponsor the creation of a similar network, which would have the same level of security and adoption. This, along with the aforementioned factors, makes Michael Saylor very bullish on where things are heading from the current state of affairs with Bitcoin. As of the end of March this year, MicroStrategy held approximately 129,000 Bitcoin worth $3,917,988,000 at the current exchange rate. So, do you think Bitcoin can survive amidst high inflation and economic crisis? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.